Are you paying too much on your loans, or is your savings account starting to feel a little light? Money with wings. If you've been scrolling through the r/personal finance corner of Reddit lately, you might have seen some buzz about Patriot Bank's interest rates dropping. It sounds like just one bank making a small change, but this is actually a tiny window into a massive shift that affects your entire financial life. So, what does it really mean when a bank like Patriot drops its rates, and why is Reddit, the home of memes and serious finance, talking about it? Let's break down this key financial news in under 3 minutes. The big picture: why rates drop. First, let's look at the cause. Banks don't lower their rates just on a whim. This change at Patriot Bank, and at others, is almost certainly a direct reaction to a move by the Federal Reserve. The Fed, our nation's central bank, sets a benchmark interest rate called the federal funds rate. When the Fed cuts that rate, they are essentially trying to stimulate the economy. They want to make borrowing cheaper, which encourages people and businesses to spend, invest, and grow. Patriot Bank, and nearly every bank, then follows suit, dropping its rates on both the money you borrow and the money you save. The two sides of the rate drop. The impact of this rate drop has two very different sides, one for borrowers and one for savers. Moneybag good news for borrowers. This is the upside. When bank rates fall, it means the cost of borrowing money goes down. Mortgages: if you're looking to buy a house, or even refinance your existing home, you could lock in a lower mortgage rate. This can save you thousands over the life of the loan. Auto loans and personal loans: the interest rate on financing a new car or taking out a personal loan will also likely decrease, making monthly payments more manageable. Variable rate debt: if you have a variable rate loan, like a home equity line of credit, HELOC, your interest rate is likely to drop, immediately lowering your monthly payment. Chart decreasing bad news for savers. Here's the downside, and this is what's driving most of the conversation on Reddit. Savings accounts: the interest rate, or APY, you earn on your high-yield savings account, HYSA, like the one Patriot Bank offers, is directly tied to the Fed's rate. When the Fed cuts the rate, banks pay you less interest. You'll be earning less on your emergency fund or savings goals. CDs, certificates of deposit: new CD rates will also be lower. The golden age of 5% APY savings accounts we saw recently is likely winding down. What you should do now. If you saw that Patriot Bank rate drop, don't panic, but do take action. This is the time to optimize your money before rates fall even further. Refinance: if you have high-interest debt, now is the moment to look into refinancing it, especially your mortgage, before new rate cuts might lower rates even more. Lock in a CD: if you have cash you won't need for a specific time, like a year or two, consider opening a certificate of deposit now to lock in the current rate before it drops again. Don't chase pennies: as many Redditors point out, don't waste time moving your emergency fund for a tiny $5 or $10 annual difference. All high-yield savings accounts will trend down together. The main goal for an emergency fund is still safety and liquidity. Patriot Bank's rate cut is just an early sign of a broader economic trend. The smart move is to use this drop to your advantage as a borrower and secure the highest possible returns you can as a saver. With that said, thanks for watching, and until next time.